Real estate has always been one of the most reliable ways to build wealth. Property ownership not only generates rental income, but also appreciates in value over time. And in 2025, with changing demographics, shifting migration patterns, and evolving economic trends, some U.S. cities stand out as incredible opportunities for property investors. People are moving. Jobs are shifting. Technology is transforming where we live and work. And investors who pay attention to these changes are the ones who will profit the most. So let's talk about the top United States cities for property investment in 2025. We'll explore why they are hot, what makes them profitable, and what investors should keep in mind before making a move. The first city that tops the list is Austin, Texas. For years, Austin has been one of the fastest-growing cities in the United States. It is a tech hub, with companies like Tesla, Oracle, and Apple expanding operations here. It attracts young professionals, entrepreneurs, and remote workers. Population growth has been explosive, and with limited housing supply, property demand keeps rising. Investors love Austin because rental yields are strong, and property values have consistently outperformed national averages. Even though prices have climbed, the long-term growth potential remains massive. Another city drawing huge attention is Nashville, Tennessee. Once known mainly for country music, Nashville has transformed into an economic powerhouse. Its healthcare industry is booming, tech is growing, and tourism keeps the city vibrant year-round. Nashville is also attracting corporations relocating from high-tax states. That means more jobs, more people moving in, and higher demand for housing. Investors see strong rental income opportunities here, especially with the influx of young professionals and students. It's a city where culture, affordability, and growth meet, making it a top choice for the year 2025 property investments. Atlanta, Georgia is another city you can't ignore. Atlanta has become one of the most important economic hubs in the Southeast. It's home to Fortune 500 companies like Coca-Cola, Delta Airlines, and Home Depot. It has world-class universities, a thriving film industry, and a growing tech sector. But what really makes Atlanta attractive is affordability compared to other major metros. People are moving here for jobs, better housing prices, and a lower cost of living. For investors, that means strong rental demand, consistent appreciation, and a market that still has room to grow. Then we have Tampa, Florida. Florida continues to be one of the fastest-growing states, and Tampa stands out as a prime location. The warm climate, no state income tax, and booming economy make it a magnet for both retirees and young professionals. Tampa is seeing major growth in finance, healthcare, and technology. The city is also undergoing redevelopment projects, making neighborhoods more desirable. For investors, Tampa offers high rental demand, especially with the influx of remote workers and people relocating from expensive states like New York and California. Property values here have surged, but demand remains high in 2025. Another Florida city that continues to shine is Orlando. Orlando isn't just about theme parks and tourism anymore. Yes, Disney and Universal are major drivers, but the city has diversified its economy. Healthcare, education, and tech are all expanding. Population growth is strong, and housing demand keeps rising. Short-term rentals also thrive in Orlando because of the constant stream of tourists. For investors, that means multiple opportunities: long-term rentals, vacation rentals, and steady appreciation. Phoenix, Arizona remains one of the hottest real estate markets in the United States. The desert city has experienced massive population growth in recent years. People from California and other high-cost states are flocking here for affordability and job opportunities. Phoenix has a growing tech presence, strong logistics and distribution industries, and year-round warm weather. For investors, rental demand is high, and property values are expected to keep rising. Even with rising prices, Phoenix still offers good opportunities for long-term growth. Charlotte, North Carolina is another booming city. Charlotte has become one of the leading banking and finance hubs in the United States. It's home to Bank of America and a growing fintech scene. The job market is strong, and young professionals are moving in at a rapid pace. Charlotte offers affordability compared to northern cities, but with similar job opportunities. For investors, the city provides steady appreciation and excellent rental income potential. Dallas-Fort Worth. Texas is a powerhouse market. This metro area has been growing faster than almost any other in the nation. It has a diversified economy, tech, finance, energy, healthcare, and manufacturing. People are relocating here for jobs, lower taxes, and a better lifestyle. The demand for housing is massive, both for rentals and ownership. For investors, Dallas-Fort Worth is attractive because of its size, stability, and long-term growth trajectory. Houston, Texas also deserves a spot on the list. While Houston has historically been tied to oil and energy, it has diversified significantly. Healthcare, aerospace, and technology are all growing industries here. Houston is one of the most affordable big cities in America, which keeps attracting new residents. Rental yields are solid, and the population continues to climb. Investors like Houston because it offers steady cash flow and strong appreciation potential. Las Vegas, Nevada has made a big comeback in recent years. Once hit hard by the 2008 housing crash, Vegas has reinvented itself. Tourism, entertainment, and hospitality remain strong, but the city is also expanding into tech and logistics. With no state income tax, more people are moving here from expensive coastal cities. For investors, short-term rentals perform well thanks to constant tourism, while long-term rentals benefit from rising population. Property values are still affordable compared to California, making Vegas a hotspot for 2025. Denver, Colorado remains a favorite for young professionals. The city offers a mix of outdoor lifestyle, strong job market, and high quality of life. Tech companies, healthcare, and finance are expanding in Denver. Rental demand is strong, especially from millennials and Gen Z who want to live in vibrant urban areas. For investors, property prices are higher than average, but the long-term growth in rental income make it worthwhile. Miami, Florida is another city drawing global attention. Miami has become a hub for tech, finance, and international business. It is also a lifestyle destination, attracting wealthy investors from around the world. The city has strong demand for both luxury properties and rental housing. For investors, Miami is attractive because of its international appeal, consistent tourism, and booming job market. It's one of the hottest real estate cities in 2025. Now, let's talk about why these cities stand out compared to others. The key factors that drive property investment are population growth, job growth, affordability, tax advantages, and overall lifestyle appeal. Cities that check these boxes tend to see rising demand, which pushes both rental income and property values higher. For example, Texas cities like Austin, Dallas, and Houston benefit from no state income tax, strong job markets, and massive population inflows. Florida cities like Tampa, Orlando, and Miami attract retirees, remote workers, and international investors while offering tax advantages. Cities like Charlotte, Atlanta, and Nashville combine affordability with booming job markets. And places like Denver and Phoenix thrive because of lifestyle appeal, weather, and growth industries. But investors should also be cautious. Not every property in these cities is a good deal. Overpaying, choosing the wrong neighborhood, or ignoring market cycles can hurt your returns. The key is to research carefully, understand local trends, and focus on long-term fundamentals rather than short-term hype. Another important factor to consider is rental demand. Cities with universities, growing job markets, and rising populations tend to have strong rental demand. This ensures steady cash flow for investors. On the other hand, if you buy in areas with stagnant growth or oversupply, you risk vacancies and lower returns. Investors should also think about diversification. Instead of putting all your money into one property or one city, spreading investments across different markets can reduce risk. For example, owning one property in Texas, one in Florida, and one in the Southeast creates balance and protects you from local downturns. In 2025, property investment isn't just about buying a home and hoping it goes up in value. It's about being strategic. It's about following the trends, understanding demographics, and positioning yourself where growth is happening. The U.S. is full of opportunities, but not all opportunities are equal. The cities we've discussed, Austin, Nashville, Atlanta, Tampa, Orlando, Phoenix, Charlotte, Dallas, Fort Worth, Houston, Las Vegas, Denver, and Miami, stand out as some of the strongest bets for real estate investors in 2025. If you want to build long-term wealth, these markets give you the best chance. They combine population growth, job creation, affordability, and lifestyle advantages that keep attracting new residents. And as long as people keep moving to these cities, demand for housing will stay strong. So whether you are buying your first rental property or expanding your portfolio, these cities should be at the top of your list. Do your research, run your numbers, and focus on the fundamentals. Because in real estate, wealth is built not by luck, but by smart, informed decisions. And if you found this video helpful, make sure to hit the like button. Subscribe to the channel for more strategies on investing, saving, and building wealth. And let me know in the comments if you could invest in just one United States city in 2025. Which one would it be?